Yo traders, what's good? So in this lesson, I'm just going to call it Breakout Trading 101, catching big moves from the ranges and the trend line. So basically catching big moves with risking small amounts of profit. That's what we do in breakout trading. That's the whole idea, to catch a big move and be done for the day. So the level of this lesson is going to be beginner level. It's still going to be really helpful and pretty much all you need, really. Like, overcomplicating trading is a big thing that everybody does in the beginning, and you don't actually need to. So this lesson is going to be fire for anyone watching it. I'm going to make you understand by the end of this lesson what a breakout is, why it matters, how to spot range breakouts and trend line breakouts. I want you to learn what makes a valid breakout versus a fake out, and also how we make money with fake outs as well, because most of the breakouts I trade on YouTube are fake outs, or liquidity grabs, whatever. It doesn't matter. I make money off them, and I'm in and I'm out. That's literally the whole point of this. So this is what you're going to learn anyway. Breakouts, fake outs, range breakouts, and trend breakouts, okay? So first off, what is a breakout? A breakout happens when price breaks through a key level, like support or resistance or a trend line. It signals that momentum might be shifting and a big move could follow. So, without sounding too technical, in a nutshell, it's basically breakouts are when you catch early entries, so strong moves, avoid late entries or choppy zones, and trade with better risk to reward. So as breakout traders, we like to risk a little to make a lot more. So let's go take a little look at examples anyway. Let's actually go on the charts now and take a look at what I've drawn up. So we got a range breakout, which is this one. We got a trend line breakout and another trend line breakout. Now the only differences between these trend line breakouts is, of course, this is a bullish trend and this is a bearish trend. So the idea is, let me move these labels up a little bit so they don't get in my way. So the idea is we want to catch moves on the breakouts, all right? So when is it most likely the price is going to break out of a range first? Let's just firstly talk about the range. When is it most likely the price is going to break out of a range? On the opening of a session, okay? So if that means you're trading gold during Asian session, there's likely to be a breakout to the upside or the downside with some volume during Asian session, but really a low amount of volume, because Asian session is the slowest session. So I don't really advise people to be trading it, but if that's all you got, that's all you got. So realistically, when breakout trading, we want to be trading the New York session and the London session, all right? Or one of each. You don't want to be trading too much in a day. If you trade the London, that's fine. And if you trade New York, that's even better, because the pairs that I trade, like NAS 100 and US 30, the breakouts are usually during that 9:30 Eastern time when the stock market opens. So that's 9:30 New York time when the stock market opens and the volume just goes crazy. So, if you watch my YouTube videos, you'll probably see that already. But that's why we get faked out a lot as well when we try and hold our trades too long and stuff. So the idea is to enter on the break of a resistance or the break of a support. Now there's a few ways we can do this. So the first way is to enter purely from seeing volume. So basically that means, like, say, let's just get a dashed line. Now let's just say this purple line is the New York 9:30 Eastern time open, when the volume likes to kick in, okay? So we're waiting for price to get it, and this is a range. We can clearly see it's a range because we got our resistance, we got our support, and we're just trapped in between it. So it's going to break either to the upside or the downside. Now, if we were just entering purely from volume, soon as we see volume start coming and kick it in and breaking through, we're in. We're not even thinking about it, we're in. So we enter, we use a tight stop loss, and we're targeting 1-to-1s, 1-to-2s, or, I'll give you some take profits anyway in a bit, and a way to target key levels, but let's just keep it basic for a minute. We're just looking at entries. So we're purely entering from seeing volume. This is what we would be doing. Tight stop loss, and we just be in, hoping that we can catch this one move. Now, if it comes back down and leaves a big wick and it just fakes us out, so, you know, it does this. Say it closes there and leaves us with a wick. So we didn't close our trade and it came all the way back down and it closed by there. Whose fault is that? That's our fault because we didn't take the money off the table. Because, you know, we're entering from volume only, which means the candle haven't closed yet. So we're just getting in while the candle's breaking through. Now, that's the most riskiest way. That's the way I trade. And that's why I get faked out a lot as well. But, you know, usually I'm in and I'm out, so it doesn't matter. So that's a volume way. And it can happen down ways as well. You know, in a range, it's pretty much 50-50 if we're going to break up or we're going to break down, right? So that's a purely, you know, a pure example of volume, entering off volume. So now there's another way. So you can wait for the candle close. So, you know, it's literally what I'm saying is you wait for the candle to close. So if the candle came up there and it closes there, that's where the candle closed. Now you'll be entering your trade. But if you was to enter all the way up there, your stop loss is going to have to be, you know, really, really far down for you to feel safe, or you're taking the risk by keeping the stop loss really tight and entering all the way up there, because the risk of it coming, you know, back down before going up is absolutely crazy. And, you know, it happens a lot. So that's why I don't really wait. I just enter, seeing volume, I just enter and I take the risk. And if I lose, then I go one more time, but we'll get into our risk management. Right now, I'm just showing you entries. So say this is the candle close. We closed all the way up there. We enter by there. Now, yeah, it could keep going, but you got to understand, usually price likes to come back down, close whatever gap is, you know, left between the candles, and then shoot back up. So you'd have to wait for it to pull back and then enter. Okay, so if you're waiting for the candle body close to verify that it's an actual breakout, then there's a few ways. You can either wait for the wick to come down, candle to come down a little bit, and then boom, shoot up, and then get back in, you know, with the volumes you've seen, we've broken out and we're still going back up after a little retracement. Or if it just closes and then it's straight up still pushing, then get in, yeah, whatever. But you got to understand that we're trying to take what we can because we're breakout traders, and, you know, we're moving with the volume and we don't know how far it's going to go before pulling back, especially on a session open. He likes to liquidate people, take people out of the game, and then do his thing. And then there's another way. The third and final way is probably the safest way to enter, but, you know, they don't come around all the time. So that's a break and retest. So the break and the retest method is, in my eyes, the safest way to enter breakouts, right? So you get a break, a retest, and a continuation. So basically, we wait for the break. We wait for the candle to close above or below, you know, support and resistance. We wait for the retest, and then we can place our breakout line there, and we can re-enter when it gets broken through, right? So that's probably the safest way. But you'd have to be a really disciplined trader and understand those setups don't come all the time. And the majority of the time, the breakouts with just pure volume are the ones that make the money. And I'll show you some proper examples in a minute on bar replay mode and stuff during them 9:30 opens. But yeah, that's pretty much how range breaks are. They literally, you know, break up or break down. And if you're entering just purely off volume, understand that price could come all the way up there, do this massive move, and then come all the way back down. And it would have just been a liquidity sweep, all right, a little liquidity grab before moving the opposite way. That happens all the time. But the majority of the time when that does happen, I'm already in. I've seen my money and I've closed. And yeah, just keep that in mind. So that's a range breakout. So let's take a look at a trend line breakout. So in a trend, you still have support and resistance, all right? So what makes a valid trend? First off, anyway, let's talk about what makes a valid trend. A valid trend is 3 touches. So 1, 2. Now you can draw your trend line after seeing 2. So you can draw a trend line after seeing 2 touches, and then The third one really solidifies and seals the deal and says, I'm a valid trend line. So in a bullish trend, right? In a bullish trend, what's happening? Every single time price is being pushed up, what's happening? So buyers are pushing price up. And what are they doing? Putting their stop losses below these levels. So every single time a buyer pushes price up, they're putting their stop losses below these levels, right? So it's liquidity. I teach you this in the Master the Basics course. So if you haven't seen it, go watch it. But yeah, there's liquidity resting all underneath this. So when price does decide to break, all right, what's it going to do on the New York Open? It's likely to sweep everybody's stop losses. So come down, and even if it does leave a wick and come all the way back up, well, you've entered with the volume, say, you're just entering purely off volume, boom. You just swept out everybody's stop losses, and then it can feel free to go on his way and do his thing, right? So that's one way to do it, is by entering on a break and targeting the liquidity. And yeah, that's one way to do it. Or the other way to do it is trend continuation. So just enter on the trend that if it's going up, just enter the break to the upside. Now this is why I use breakout lines as well. I'll show you on the charts. I use breakout lines. So I put my support, my resistance, but I also put a breakout line for when the structure gets broken. Oh my bad. When structure gets broken. So there's two ways you can enter on a continuation. You can wait for that liquidity grab, and then you can see price, come back up and then do his thing. Or you can genuinely, sometimes it doesn't even do the liquidity sweep. It does the spike up. It just goes straight up and then it comes back down. But understand, yeah, no matter when it is, if it is in the session that we're trading now, all the liquidity that's laying underneath all of these pushes to the upside, everybody's stop losses are going to get eaten at some point. So we're just targeting those, and we also target key levels and stuff. Same thing down here. We got a bearish trend. What can we expect when price breaks? To come up and sweep out everybody's stop losses from these areas there. So you got to understand, every time there's a seller pushing price down like this, they're putting stop losses somewhere, right? They just are. Or there's people putting orders on these levels. So this is just, quick example. Someone's put a buy order there, anticipating the break. So anticipating a reversal. So as soon as price taps into this level, they're in for a buy. Now they think price is going to trend and do his thing and carry on. No. A lot of the time, price just comes up, triggers their order, gets everybody into a position, and then goes boom. Especially on pairs like NAS 100 and US 30, right? And even though this chart's a GBP USD chart, it doesn't matter, because I'm not going to use this chart to go down in a minute and show you the proper candles. I'm going to go to NAS 100 and US 30, but I was just showing you this for the drawings. All right, so let's do a little example of a break and a retest on a trend. So just because a trend line gets broken, let me make something clear as well before moving on. Just because a trend line gets broken through like this, all right, say the trend line gets closed, does that mean we've broken structure? No, it doesn't mean we've broken structure, because in this, example, this is the higher high. This is the higher low. Price might have broken the trend line, but this could just easily be a fake out, and it could carry on back up because they haven't actually candle body closed below the structure. So until price breaks the trend line and candle body closes below structure like this, then it's a valid breakout of a trend line. So don't just think when a trend line gets broken, it's good to get in, because unless it breaks the actual structure, and in this example, we're bullish, unless it breaks, this higher low there and candle body closes, we're still in an uptrend. So as soon as this happens and we candle body close, now we can anticipate, right, is a reversal. And what can we do? And wait for the retest. and we can wait for another break of structure, or not another break of structure, because yeah, just a continuation, just a break through another low or higher, right? So there we go. I don't want to confuse people. Do you know what I mean? I don't want to make this too complicated. I just wanted to give you more than the ABC 1, 2, 3 bullshit, because even though this isn't the advanced version, which is going to be in the academy, I still wanted to add a little bit of liquidity and things that we learnt about in the Master the Basics. So hopefully now you understand the 3 different ways you can enter breakouts, which is purely from volume, wait for a candle close, and then wait for a break and a retest. That's the safest way. I'm going to go to NAS 100 now, and I'm going to actually look for real live examples. So get Sessions by Lux Algo, my favorite one. Now, if you want this indicator, then find it. Make sure the UTC is set to yours. So my UTC plus would be 1. See that in the corner, time zone, UTC plus 1. So make sure it's set. Right, let's just go over yesterday. I'm not going to cherry pick nothing. I'm just going to go over yesterday's example. What's this a perfect example of? Well, this is a perfect example of a range. And we just covered a range breakout, yeah? So what was the ways I told you could trade a range? Well, we can either trade a range just purely getting in off volume. We can wait for a candle to close, or we can wait for a break and a retest. That's the 3 ways we can look at it. So let me just draw my support and my resistance, because it's a range. Right, so there's our range. Now we want to break at this range. You know, we got a support resistance. Even make this box a little bit bigger. I'd be really generous when I'm drawing support and resistance zones, because then the next step that I do is I put my breakout line. So I put a breakout line there, and I put a breakout line probably there. Okay, so this is where it can get really tricky now. So the safest place to put your breakout line would be there, because you know this is a support zone, so you understand that if price comes down, it could genuinely react from here as a support zone and bounce. But also, price likes to break through a lot as well. So okay, let's say I just put my breakout lines there, because this is the most recent structure for me. Now, I genuinely, if this breaks, would enter, full well knowing that we could, you know, bounce from this zone. So I'm okay with that, you know. If I enter on this break now, 20 pips stop loss, really aggressive. As soon as I'm at 1 to 1, I'm moving to break even anyway. But let's just say I target a 1 to 2. Let's just see what happens. Oh, fuck. So even though I was pips away from being stopped out with a 20 pip stop loss, my broker Fusion Markets definitely would have allowed this, I'm telling you, because it's like 0 spreads on the New York session. So, you know, aggressive stop loss, I still would have hit my 1 to 2, literally on this fake out. This is why I say to people, fake outs, they're okay for me. I don't really care, because even though we just had a fake out and we purely entered off of volume, not anything else, I would have been in. Boom, straight up, whatever, I'm in. I'll tell you in risk management how to set your stop losses, but there's 3 when you're entering purely off volume, and that's 20 pips, 30 pips is safer, and 40 pips I tell people is absolutely the safest way you can enter from volume. That's as big as I'd go on NASDAQ, all right? So anyway, that would be the winner for me. Let's say you put your stop loss down there. You was playing it a bit more safe. You want to actually see the support zone get broken through. Now, if you entered purely off volume, you would have been fucked, really, unless, yeah, even with a 40 pip stop loss, it would have come back, you'd be fucked. You waited for candle close. Okay, now remember when I said to you about waiting for the candle close? What did I also say? Rewind it if you can't remember, to let it sink in. I said that if you do enter off of pure volume, you got to expect what? The candle to come back up and close the gap before dropping. So, you know, it's rare that price ever just candle body closes and then keeps shooting down. Sometimes it has this pullback, and then you can draw another breakout line. So let's just see. If you waited for the pullback. Okay, so this candle's way bigger. That's more than a pullback. That's actually a bullish engulfing candle. So it's bigger than the bearish one. So yeah, I'd say that's invalid. I wouldn't be looking for a break to the downside now. I'd probably just be looking for a break to the upside if you missed your opportunity. And I'll say why, because This is a big bullish engulfing candle. Now a little pullback would have just been, you know, up and then drop, so there's no wicks in between the candles and stuff, but that's a big ass candle. So yeah, see, so that was a pure fake out. Could have avoided it just by knowing that big bullish candle was like, nope. So really, realistically, you know, if you didn't take a trade and you was waiting, you want to be safe for a break, a retest, and a drop, or whatever, you'd still be waiting. It could just be a choppy day. But yeah, so pretty much was just a really choppy day. So let's go to the day before. This is Monday of this week. I'm not cherry picking none of this shit. You know, it happens all the time. So we kind of have a consolidation, yeah, right? We kind of, but overall, what's price doing? Price is making higher highs, yeah. So we're kind of in an uptrend, right? But in uptrends, we still have our support and resistance areas. So we still have a support and resistance areas. Now, I've done a, lesson on support and resistance anyway. If you haven't watched it yet or mastered the basics, go do that. But yeah, I draw my support and resistance where there's the most recent price. Like if we're in between a support and resistance, so because we're in between these two, I'm going to use these. Now, of course, this up there is a resistance. This there's a resistance. This level down, this area down there's a support. But right now we're literally there. This is the most recent ones. So anyway, let's put our breakout lines on the structure. Breakout line down there. So remember the three ways we can enter now. Purely on volume. Wait for a candle body close. Or wait for a break and retest. So we're going to just test all three of them. So I enter on pure volume. So as soon as volume breaks up above there and it's kind of like showing me, right, I'm going, I'll enter on volume because I'm okay being faked out. I'm usually at break even, or I close manually, or I just close with profit, right? Or I lose and I don't give a shit. So let's just see how it would have worked out for me. And I'm not placing my breakout lines directly. I'm not placing my entries directly on the lines because I need to see the lines get broken through with a bit of volume before I get in. So that's why they're above and below the actual breakout lines. Okay, cool. So at the time, I would have seen this going with some volume, pushing through, and I would have got in, no hesitation. So yeah, potentially 1.5 already. Cool. So you can clearly see that this day, it was just my day. There was no break retest. I mean, the other way you could have entered this actually was a candle body close. So let's just say you was entering off candle body closes just to solidify and really show this was a true, genuine breakout. You enter there. Now remember, 20 pip stop loss is aggressive, 30 safer, 40 is the safest, and the most I'll ever use on NAS 100, right? So you want to target 1-to-1 at least, and as soon as you're at a 1-to-1, you can move to break even. Cool, so right now is a risk-free trade, and it's up to you how far you want to let it run, all right? Now you could have like kept it going until you've seen this first purple candle, you'd be up, right? Regardless, lovely, good day, perfect example of a breakout. Does it happen like that all the time? No. I'm going to definitely show you some bad examples and bad days. Let's go to the day before. So this was Friday last week, and we're just going to roll with it. So another perfect example. Here we go. So what's this? Overall, it's an uptrend, yeah? It's an overall uptrend. So if it makes sense to stay in it, so I'll show you. But let's just stick to the 5-minute time frame for a minute. So what we're doing, we're drawing our resistance area, right? So let's just take a look. Right, that's not actual valid trend length. It's not 3 touches yet. So that's out the fucking picture. Get rid of that. Yeah, there's no valid trend line that I can see. Okay, so we know we're bullish. Overall, we're going up, but what way we break doesn't really matter because price is so volatile. We need to expect breaks to the up and the downside. So I'm going to put my breakout lines there. Now, what did I tell you happens when price gets pushed up? I told you people put their stop losses below these structures, right? So there's people's stop losses somewhere down this area, there's going to be stop losses, you know, even there. Well, actually, we just took that with this wick. This wick just took people's stop losses or whatever, right? Triggered people's orders. So on the breakout, we can anticipate these levels to be taken out. Okay, cool. So let's say I entered purely off volume. Would have entered there. So 20 pips stop loss. I'd still be in. And I'd be at break even. I'd already be at break even anyway. Because price came all the way down there. I would not let it come all the way back up and take me out. I'll just close at break even. I'll take a small loss, right? Okay, cool. So it went down even further. That's almost a 1 to 2. I'd probably be closed out by now. I'd be done. Nasty price action, but I still would have won purely off volume. Cool. So yeah, it came back up. It would have stopped me out if I didn't close. Let's see what would have happened if I used a 40 pip stop loss. The safer stop loss I advise you to use if you want to be a safe conservative scalper. 40 pips on Nasdaq. Cool. So came down and smashed exactly where I said it would. Took people's stop losses, and it's probably going to make its way back up now. That's 3 examples anyway for a minute. Let's look for some bad examples. So what can we see? We can see price coming up, making higher highs. So it's an uptrend. Can we put a trend line on there though? Right, cool. There's the trend line. So we got the wick that taps in there. We got 2 touches there, 2 wicks. Then we've even got another tap for there. It's like 4 touches. So we got a trend line, pre-market open, cool. Now we need to draw some support and resistance. So right now, the most clear area that is resisting is obviously this one. And a clear support level would be, well, this one, because that's the range we're in between, all right? Get rid of these now so don't get too confusing. And we also put our breakout lines. So I'm going to put a breakout line there. And I'm going to put a breakout line all the way down there. So if it breaks the trend line, I'm not getting in. But if it breaks this level down there, then I'm getting in this line. So let's turn that trend line purple so we don't get too confusing. Cool. So I'm still waiting for my breakout lines to be broken. Okay, so there we go. I'm in. Just entering from volume. Let's just stick to my 20 pip stop loss because I'm really aggressive and I'm looking to lose. I want to show you a bad example. Perfect. So I got stopped out that day. That's my first loss. Now I can wait. I can either readjust my trend line, my breakout line, and put it there, or I can wait for a break to the downside and target the liquidity, people's stop losses. Okay, so let's take a little look what happens. Okay, there we go. So let's be fair, let's be real. Really, really choppy day, nasty day. But remember what I said, at some point, this candle was this big. So knowing at some point the candle was this big, I was entering. Trust me, I was entering. Even if I used a 30 pip stop loss, whatever, look what would have happened. I would have been stopped out again. So that's my 2 losses. I am done. My trading plan was there. My trading plan was perfect. Look, it was all there. I had a trend line, check. Support resistance is looking nice and clean, check. And we get the breaks with volume. Now, because I'm a strictly volume trader, I lost twice, fair and square. I get off the charts for the day, I call it a day. And let's say you was a type of person to wait for the candle body to close. So you get your close. Now remember what I say. you're waiting for a little minor retracement before it carries on. So let's see if you get a minor retracement. No, what do you get? You get a big bearish engulfing candle telling you, I'm fucking done. Like, I'm not going up for a sec. The bears are still in control because this candle's bigger than the blue one. So fake out. Cool, doesn't matter. You're still waiting for a candle now to close above this and carry on strong. So cool. So there it is. There it is, right? There it is. So candle closes above. The next candle's a nice solid blue one. You can tell now. All right, cool. We've broken out. Put your buy order. No, your buy order. You're in. 40 pip stop loss to be absolutely safe. And you're on your way because you waited for the candle to close outside and show you, right, I'm still carrying on. All right. Now, I don't think there was an opportunity for a break and retest, but I'll let it run. And there was no break and retest that day. It was just a really choppy day, and then boom, carries on. So there we go. This looks like a nasty day. Let's take a look at this day. So what do we have? Downtrend. We can anticipate breaks to take what? Liquidity, liquidity, liquidity. But, you know, let's just firstly do the steps. Boom. 1, 2, 3, you got a trend line. My bad, I forgot to change it back. For fuck's sake. There we go. So, you got support. Resistance, support. Because this is the range we're in between. So, you know, these are the most recent ones. You get the picture, right? You get the idea by now. And a breakout line there. So even though this candle have closed, also, I don't know if I've actually even mentioned this yet, which is stupid of me. But my breakout lines are always on the candle bodies, not the wicks. So it's the candle bodies, but it's still structure. And I think I mentioned that on Master the Basics somewhere, so go and watch that anyway. You really should if you haven't watched that. You should be watching that before this. So we can anticipate a break to the upside, clean up all this liquidity, or continuation down. Now I'm entering on volume, remember, so take a little look. There we go. Perfect. So 20 pip stop loss for me. And yeah, I'm happy. Fed me that day. Now let's say you, and that's me purely entering off volume, remember. Let's say you wait for the candle body close. What you're going to want to see, you're going to want to see the candle come back down, close the gap between, you know, this wick there, so there's no fair value gap, and then a continuation up. So we want to see it come down and then show us that it's coming back up. It's pretty hard to do on bar replay mode because, you know, it just gives you solid candles. It doesn't show you how they move. So let's just see what the next candle does. I've come down. Right, we're back now. It's just depending on what the next candle does. We need the next candle to be bullish, really, because then that's going to be like a break and a retest, okay? So we need to see what happens here. Nope, invalid. Doesn't matter. We don't get in the trade. All right, when you see this, you see all these wicks now, and you've been waiting for some clear direction. Just forget about it. Get off the charts. That day was in your day. That's how you deal with it. So I'm going to go to gold now. So we're on gold. So this is Monday this week. Take a look at this. You can see there's a clear trend line. Lovely trend line. But what's price actually currently doing? It's come up, it's tested the trend line. Now it's back at the trend line. So is it going to break and carry on? Or is it going to carry on and come down? Well, the only thing we can do now is stick to the plan. So we can put a resistance line there. Boom. You got a resistance. Now, of course, there's more areas down there. But right now, this is literally like the range that we're in. I'm going to put it there. So I could put my breakout line there. But why would I want to put it there instead? Because we're in a trend. So it could come up and tap this trend line now. It'd be cleaner to put my breakout line there instead of there. Because if I think, oh, if this little line gets broken now and I get in, well, look at the sense though. Make it make sense. There's a trend line and there's a resistance. So at least if I put it up there, and we break, that means we're breaking a trend line and we're breaking the breakout line, and we're potentially breaking through this. So that's what I would do. I put it there, and then I put it down there. Okay, I'm just waiting for the break. Probably a news day, whatever. I don't even know, actually. Monday just opened up on fire. So anyway, what have I told you before? When price gets pushed up, is leaving fucking liquidity, and people's stop losses are there. So I'm entering on the breaks. I just seen what happened. It would have been a beautiful day for me as a breakout trader. And this is London session and gold. So it goes to show that as long as you're trading the right sessions and the right pairs, then it's gonna be cool. You're gonna get fat dubs when they happen. Let's take a little look at GBP USD during London. Same shit happened that day, so it must have been a news event then, maybe. Let's go to last Friday, GBP USD during London session, just to show you this shit works on everything, as long as the sessions and the pairs are right. So, do we have a trend line? Because like I told you, I'm counting these two candles there as 2 taps. These candles there as 2 taps, that's 4 taps. So we got a trend line. So we put our resistance there. That's the one that makes the most sense. It's clean. We're waiting to break above that one. And then we got a support down there. So yeah, let's get some breakout lines on the go. I wouldn't want to put it there because we're already there, literally. So I'd put it over there. Breakout line over there. And a breakout line down there. Let's make that shorter so it don't look so ugly. Let's take a little look at what happens. Cool. So I'm entering on volume. Nice little tight stop loss. And there we go. So you can see where price is heading. It's heading to previous structure. It's heading to liquidity, where price was pushed down from. That's all it does. That's all price ever does. Now, for a bonus, because you're all my peoples, right? I'm gonna leave a link to an indicator that I've tweaked up and called it my own. I called it the CAFX Liquidity Pro. So it basically puts the purple lines on the chart for you, and as you know, these are the take profits, yeah? So when they get tapped into, they leave grey dashed lines, and then the grey dashed lines disappear after a while. But yeah, you can see where the TPs got hit. Now, when you originally, you know, use this indicator, it's not going to look like what I've got here. It's going to be like this. So what I do is I uncheck these two. I change the daily to the 1 hour because I'm a scalper. I'm using the 5-minute time frame. And I also change this to 1 hour. Okay. And then I change my colors. That's all I do different. So let's change that. And let's change that. And there's my settings. CAFX Liquidity Pro. Literally just an indicator I remixed, made my own. And now you lot can use it. And it'll help you big time for take profits. Like, look, it's telling you the next TP's up there. So does it get it? Yeah. So smashes the TPs anyway. You get it. So it can come in handy. But that's pretty much it. So I just wanted to show you the breakouts work on every single pair, any single time frame. Like, fuck, do you know what? Before I end this, let me just quickly go and show you something random as fuck. Like, all right, let's just get even more random. Let's just go for a pair nobody would. So this, like, go for the Aussie dollar USD. Let's just go there. I don't even know what, you know, when I should be trading this, but let's just take it from London session open, the Aussie dollar, mind, versus the US dollar. This is on the London open. So trend line, check. Resistance level, check. Not level, area, sorry, check. Support, check. Now, okay, I'll have to drag this down because we're pretty much there. Now I'm going to put my breakout line there. Would have been there, but we've just broken it, so we got to be there. And I'm going to put a breakout line there. Okay? Or actually, no. I'm going to put a breakout line up there. Why is that? Because look at where the trend line is. So if we put a breakout line there, it could just be retesting the trend line. But if we break above this, we're breaking the trend line first, and then we're breaking our breakout line, okay? So let's go back to purple, so boom. And let's take a little look at what happens. Oh, there we go. So even though it came back down, let's just focus on what did happen. We broke our trend line first. Then we break our breakout line with volume. Boom. Tight stop loss. I'm in. And let's just take it back. Let's just take it back before it even broke. Let's just see if the indicator would have showed us some take profits. Look at that. I didn't even know that was going to happen. That worked out perfect. Take profits get boomed. Boom. Come on now. So I don't want to hear now on YouTube, I don't look after my fucking subscribers. I don't want to hear none of that shit. This breakout lesson is more than a beginner one in my eyes now. I think I've pretty much just given you, you know, a big piece of the blueprint. Like, so yeah, I think that you should be happy with what you learned today. Let's just not get too ahead of myself for a minute. Let's just cover some risk management. So risk management for these kinds of strategies. All right, this is how I want to manage my risk. So I'm scalping for the day. I'm on US 30. Cool. So let's say 25 ticks or whatever, 25 points is what I want my stop loss to be. I'm happy with that. It's aggressive, but I know the risk. So I'm going to click on, fucking can't even click on create order because it's logged me out of my broker 2 seconds. Let's just go on paper trading. I'm just going to go on a paper trading account just so I can show you how I calculate risk. So we're in a downtrend, just broken structure, whatever. So I'm waiting for a drop to the downside, right? Whatever. I'll put my breakout line there. This is how I would work out my risk. Say I want to get in on there and I want to put a 30 tick, whatever, pip fucking stop loss. I'm going to right click, create limit order. Now you can see there, this is currently what I'm risking. So let's just delete that, click this once, and now slowly start adding to it. So I know, let me just go back. So 3 units. I know 3 units now is giving me $92 risk. So if I lose, I'm losing $92. And if I hit a 1 to 2, pull this down to a 1 to 2, then I'm going to make double the money. Yeah. So that's how I work it out. So now I got it in my head, minus 92 for my stop loss. So I can delete this because I get in with instant buys and sells. I go over there and then I make sure instant orders are placed. So now up in the corner, there's 3 there. There's 3 units ready for me to buy or sell. So as soon as price, you know, comes down and breaks through there, I can get in. So I'm going to keep this over to the side. Say price breaks now and I enter right there. I could just press sell and I know then I can drag my my position fucking stop loss take profit tool over. And this is how much I got to breathe. This is the breathing room. So that's how I figure out my risk management anyway. Pre-market open and stuff. But I really need to end this lesson now because I got 30 minutes before I got to trade literally the live market. So yeah, I'm going to end this lesson. But I hope that I covered quite a lot in this anyway for the basic version of the breakout blueprint. Fuck me. I mean, I've pretty much give you all the tools that you need to go and make some money now, like instantly, as long as you manage your risk properly. And I will say, actually, I need to do a little bit of risk management. I'm going to quickly break it down then. So if you're on a prop firm, you need to be risking 1% per day. You need to break that shit in half. You need to like lower the risk because if you're risking 1% per day, we're impulsive traders, we're trading breakouts. You need to like half it at least. So risk 0.5. Stop trying to pass it so quick because that way you're taking pressure off yourself. So yeah, by halving the amount, say, I don't know, maybe you want to risk 2% per day. Well, that means like potentially if you was to break that 2% down to 4 trades, you got 4 trades. So if you lose the first time, it doesn't matter because you know you've got another three goes. So what I'm trying to say is risk less and trade more. But as soon as you hit that win and you take profit and you're happy, and say you're going for 1 to 2s, then get off the charts and be happy. Don't overtrade. But yeah, less risk, more trades, or more risk, less trades. Just do that, because prop firms are going to give you stricter rules and you're going to need to like stick to the rules or blow it. So they're going to set you up for good trading habits. That's the words I was looking for. But anyway, that's it for this lesson. I think I've given you loads. The indicator link is in the description, and prop firm match is also in the description. So go find yourself a nice prop firm through that link if you want. And yeah, that's it. Catch you in the next one. Price does today. So we are open. So we're going to respect the trend line on NASDAQ. Bit more volume. Okay, so it is pushing. Yeah, there we go. Looking a little bit better now. I'm going to take that. Take that off the table. Would be doing it now, right? When I know it's going to tap into those fucking areas. Yeah, it does. All right, cool. I'm taking them. I'm good with that. I'm good with that. Now I'm really done. So I'm just like trying to target this TP1. Then this TP2 would be nice. This TP3 is pretty far. So I definitely would be happy just taking these two first TPs out. It's not pushing down like I'd like it to. Yes, I'm going to close just because it's starting to push back